Well, yesterday marked Tax Freedom Day in the U.S., meaning Americans earned just enough to pay taxes at the federal, state, and local level.
So how's that feel? You've worked 4 months
Takes
about
this long,
yeah, just to pay your taxes. So 2016 taxes already filed. Plenty of items to review and look out for this year to help reduce your taxable income in 2017. Elijah Kovar from Great Waters Financial joins us with a 3-step guide to help you reduce your taxes now and in the future. Elijah, no one wants to get that giant bill.
Yep.
It's rough.
So you have to be proactive now.
I mean, it means you're making money. That's nice.
Yeah.
It means you're making money, but there are some things we can do to be smart with the money that we make. Number one is maxing out that 401k, 403b, 457, whatever that employer plan you have is. You can put up to $18,000 per year in there. A lot of people think that if I max out my 6% match from my employer, I'm doing what I need to do. Well, every dollar that you put in, you get to write off on your taxes. So $18,000 a year. If you're over 50, there's another $6,000 catch-up contribution you can make. So up to $24,000 a year. $5,500 on traditional IRA, $6,500 if you're over 50.
Now, I did my own taxes this year, and I had forgotten to deduct my charitable donations.
Oh, no.
Then I had to go back and do it, and it really makes a big difference.
Oh, a huge difference. And we have a lot of fun with this. With my clients, we look at how can we give more to charity and still keep just as much. And if you're strategic about this, you really can.
Interesting.
So, number one, you can, if you itemize like you're talking about, you can deduct it on your taxes as long as you're giving to a qualified 501c3 charity. But people can also give property. So whether that's clothing that you don't need anymore, or furniture, or car seats, if you've got kids that are older now, you know, or whatever it may be, you can write those off. Just make sure that you're documenting those. You can typically
Places like Goodwill will give you a slip and all
They
that.
will.
But you still have to do the work, right?
Yeah.
You need to find the value of these things. And there are good websites you can do that.
Yep, there are good websites. Create an organized list, write down the value of every single item. My wife and I don't do garage sales anymore. All the time that you put in, the hassle that you put into a garage sale, for us the tax benefit is more than what we'd make at the garage sale anyway.
Right.
And we get to make a difference.
Right.
People are also using what are called donor advised funds. These are a powerful, oh my gosh, powerful tool, and they're free. You set up the account. You can gift highly appreciated stock or mutual funds into your donor advised fund. Get the write-off for that and avoid the capital gain. And then you just do your charitable giving from the fund.
That's smart.
The last tip is consider hiring a tax pro. Plenty of people can do their taxes themselves, but
you can do them yourselves, but there's a difference just filing your taxes and looking forward strategically. And more important than just having a good CPA, making sure you have a team that's working together on your behalf. Making sure your financial planner who understands your finances is communicating with your CPA. They're looking for opportunities, saying, what can we do this year to avoid larger taxes down the road?
Yeah, it's smart. You got a tax plan all year round, not just in April.
Yes,
that's right. Elijah Kovar, thank you so much for coming in. We appreciate it.
Great being here.